I'm just going to give you my bottom line up front, which is we've been talking about the digital economy and all these digital transactions that we want to do. And the bottom line is you can't do digital transactions unless you have digital identity, right? On every one of these transactions we've seen in all the presentations today, there's always two sides of the transaction, the buyer who has some money and the seller who has something the buyer wants. And so the implication of that is that there's a KYC requirement for this audience. Who are these people on both sides of that transaction? We need to know. And so when it comes to KYC, there's only two ways to do it today. The gold standard in doing KYC today is the counter method. You require somebody to come to the counter to show some documents so you can get a certain amount of business confidence this person is who they claim to be. Now the good thing about the counter method is it's very reliable, like it's the gold standard in identity proofing. The downside with the counter method is that one is the cost. The cost of gathering all this data from the customer at the counter is actually quite expensive. And the second consequence of this choice is it really has a lot of fallout. If I'm a pure digital player like a digital bank, I don't have a counter to bring the customer to. So we have a lot of fallout for digital services, which is kind of what we heard Randy complaining about, is that he has no way to onboard his customers. So that leads to the second method. We've got the counter method. The second method that we have today for doing onboarding is what I call the Coattail Method. A bank, Bank 2, can onboard their customer through basically demonstrating control of an account, provided I've been enrolled at a bank already. So if I've been at Bank 1, I can get into Bank 2 if I can do either a micro deposit transaction demonstrating I have control of the account, or I can clear a check on that account. That's the Coattail Method. The good thing about the Coattail Method is it's less friction. I don't require the counter visit. The downside with it is that doesn't answer all my questions from a KYC perspective. The user's demonstrated control of a KYC account, but I still don't know who they are. I still have to ask them for their name and their address, their phone number, and all this stuff. And so the Coattail Method is better because the digital guys can play, but it's still got some friction attached. So what I'm going to talk about today is a third method, a new method we want to launch this year. The good news about this third method I'm going to show you is that it's better than what we can do on the counter method, and it has less friction than what we do with the Coattail Method today. And that's what my whole presentation is about. As an industry, we like to talk about this thing we call digital ID. And for geeks like me, I like to talk about this all day long. And we use this digital ID for getting things that we want online, whether it's registering to vote, to get to Airbnb, to get my tax information, health information, and so on. The challenge is, your mom and my dad, they don't understand what digital ID is at all, and they kind of don't care. The little they do know about it is that it's really frustrating to manage all these passwords. They also know that it's got a lot of complicated rules attached, like they're supposed to change it every second week, and it's going to be supposed to be long and complicated, and they're supposed to share, not supposed to share it across sites. And the third thing they know about it is it gets a lot of bad press. So users don't care about digital identity, but they care what digital identity does. And what digital identity does is give them access to the things they want to get. That's what digital identity is for. When we have a user here, and she's got a challenge, like she's trying to get access to services. So she might go to the branch, only to discover she's not brought the right documents today. She kind of gets frustrated because she can't accomplish what she wanted to do today. When she comes to your online channel and she forgets the password again, she's going to abandon the online channel. The average user today has 130 user IDs and passwords, right? So it's a lot to manage, expecting people to remember all these passwords in their head. And so the interesting thing about identity is we need to make it easier. And so she wants what you want. What you want is an easy way to prove you are you when you want to get access to a service. That's what this is all about, making it easy. And the challenge is today, it's hard for users and easy for crooks. The crooks, this is no issue at all. They're in like a heartbeat. They've got their database, they got off the dark web, they're in your social media profile. And for them to get this information about you is actually a pretty simple thing to do. So here's the irony. So today's services are designed to keep crooks out. They're not designed to let customers in, right? You are presumed to be an imposter until you can prove you are the customer. This is a terrible way to design services, right? It's kind of like the Monty Python movie. You've seen it before, where they're in the Trojan horse at the door, and they ask for the password, and on the third attempt, they fling the guy into outer space. That's what we're doing to customers today when they try to get to us. It's a terrible way to design a service. It gets to the call center, which is the third channel where I try to access a service. When I go to the call center today, the prevalent method of getting identity is interrogation. We ask lots of questions. And the challenge is that I come to your website, you ask me, sorry, your call center, you ask me all these questions, I answer them, and then I find out that the first agent can't help me, so they transfer me to agent number 2, and they have to ask me all those questions again. And so the problem is, from a user point of view, is my biggest frustration at the call centers. I actually don't know the answers to the question. I'm Andre Boysen, and I can't pass the Andre Boysen test. That's how retarded this is, okay? And so the challenge then is, how do we change this? The crooks have all the answers, but the user doesn't. So this knowledge-based authentication, we really have to get rid of it. So this gets us to what we're doing. So we actually have a network that Randy referenced. So this launched in 2012. And allows Canadians to use their bank account to get to government. So if I want to get into CRA, I can use my bank account to get there. And this has been transformational for the government. The challenge the government had is, every single year you went to CRA, every single year you forgot your password, every single time. And every time you forgot it, it cost them $40. The reason is they have to be sure it's really you. So in order to let you in, they send you a piece of paper in the mail. You've got to get the piece of mail out of your mailbox and then type that back into your computer to get in. That costs $40. So the challenge they had is that, for 2004 to 2012, it cost the government of Canada $1 billion to operate this service for 8 million Canadians. And we've taken that cost from $1 billion down to roughly $200 million for the subsequent same time period. So it's been transformational. The cost savings by going to a network identity service for government has been huge. But here it gets better. Now customers are getting pissed off when they go to CRA. The challenge is, if I go to CRA, every time I get locked out, by the third time I say, forget it, you guys don't get the internet, I'm not coming back. I'll go see you in person instead. And so that drives their costs up even higher. And then when you finally do get your password reset, only to find out you can't do on the CRA website today the thing you came to do, that's it, you're done. And so government gets stuck in this negative spiral. And it's not because the government doesn't get it, they do get it. Their challenge is that you're forgetting. And in order for them to serve you, they got to know it's you. It's a KYC problem. So the service we have today is authentication only. It doesn't say who you are. So what the banks did in October last year is they invested $27 million into SecureKey to take it to the next level, to solve this registration or KYC problem. And that's what I'm going to spend the rest of my presentation talking about. The one thing I do want to do is just emphasize is that the US government thought this was a really cool model. So in, I think it was January, the Department of Homeland Security gave us a $1.2 million grant to help us build out this network because they want us to be successful with this, and they want us to copy it in the US. One of the reasons they're interested in it is because of the privacy model we built into it. And I'm going to talk about the privacy model in a few minutes. So what we believe is, if we're going to bring users along on this journey, users kind of have to understand what's going on. So forget about the internet for a second. When we think about how real identity works, in-person identity proofing, we're typically using stuff I have already to get the stuff I want. So if I go to Service Ontario, they'll say, bring government-issued ID and something that proves where you live. Then I look in my life and say, well, I'm going to bring my bank statement because that shows where I live, and I'm going to bring my driver's license, that shows I have government-issued photo ID. Each of us in the room could pick 2 different providers, but we can all get the thing we wanted. So consumers kind of get how in-person proofing works. What's lacking in this digital world is a method to do this electronically. But what users are trying to do is things like get access to medical records, or open a new bank account, or open a new cell phone account, sign up for Airbnb, change their address, or prove that I'm trusted. So social sharing economy is a big thing. Airbnb is an example, Kijiji is an example. The problem with Kijiji is I don't know who you are and you don't know who I am. Yet we're trying to do this trade. So the Brampton police have set up a camera on a telephone pole outside the police station. I've got a pair of skates, you got $100. We meet at the telephone pole and we do our deal there. It's like Breaking Bad. That's what we're doing to do trades now on the internet. So this trust gap is actually quite large. So what we need to do, though, is allow people to take the stuff they have, these trusted relationships, in a digital way to do the same kind of thing online that they're already used to doing in person. So how do I get a digital ID? Here's Carol. She's going to sign up and get her digital ID right now. What she does at the beginning, she opens this app called Verified Me. And the first thing she's got to do is log into her bank. So this is like the Coattail Method I talked about. She's demonstrating she's got control of her bank account. I've sped it up a little bit because watching the password be typed isn't that interesting. But when she gets in, there's a disclosure thing here. It tells her what's about to happen. You're signing up for this service called Verified Me. Sorry, lawyers everywhere. So there is a bit of detail. But at the end of this, it kind of says to her, hey, you've signed up for this service, and all the information the bank knows about you is now part of the network. She can take it a step further and verify her cell phone too. So now the bank says Carol's Carol, and at the end of this process, the telephone carrier says Carol's Carol, because she's been able to demonstrate control of both of these accounts. And then in the third instance, she can actually bring in her credit score because she wants to rent an apartment tonight. So how does she prove her credit score? She goes to TransUnion and does the same kind of thing and demonstrates she's Carol to TransUnion. So now the bank says it's Carol, the carrier says it's Carol, and the credit bureau says it's Carol. And so if she's curious, she can actually click on it, the detail, and see exactly what each of these providers has stuck in her safety deposit box. So that's kind of cool. So now that she has this digital ID, what can she do with it? She can go to a new telco provider because she wants to get a new cell phone. She's going to walk into the store, see the agent at the counter, and there's a couple different ways she can do this. But one quick way, she just pull out her app and snap the QR code that's on the agent's screen. And what it's going to do is tell her what's about to happen. So it says to her, well, she hasn't done the QR code yet. What she does that, it says to her, hey, Roger's here, wants to know who you are because you want a service from them. Are you okay if we share this information you have on file with your bank with Rogers? If she agrees to that, all she has to do is put her finger on Touch ID, and boom, Roger says, you're done, here's your new cell phone. So in a couple of seconds now, she's been able to prove her identity in a trustworthy way to do a transaction. So that's an in-person transaction. What about a pure mobile transaction? She got an email alert on her phone. She clicks on Verify Me, it pops open the app on her screen, and it says to her, hey, Rogers wants to know who you are. Well, are you okay if we share your credit score and your bank information with Rogers? If she agrees to that, and it puts her finger on Touch ID, she consents to the release of the information. In a couple of seconds, she's been able to sign up for new service on her phone. And this is not done yet, but we've been talking to the regulators about this process, and this will meet the KYC requirements that both banks and the carriers have for signing up for a new account. So going through the videos is a little quick, so I'm just going to slow it down here and show you how this works. You start with something you want to action. This is no different than like starting at Amazon with the thing you want. If you got the thing you want in focus, say I want to start, it asks you to authenticate with your bank, demonstrate the control of the account. We tell you who wants the information and what they're going to get. And if you're curious, you can click on this and see exactly what information is going to get shared across. If you consent and put your finger on Touch ID, in a pure mobile experience, within a couple of seconds, you're able to get a new mobile account from Rogers. So this is how we're going to make digital ID better. So this builds, again, on what we're used to in the real world. In the real world, the user is the point of integration. So absent the internet, I'm walking around all these places trying to prove who I am. So I might walk. What's good about this model is the consumer's making the choices of what happens and what doesn't happen. And what's cool about when I share my bank statement over at Service Ontario, TD Bank doesn't get to see that I did that. So that's actually kind of cool from a privacy point of view. The downside with this method is a clever user here in the middle can Photoshop that document in a way Service Ontario can't tell. So it's lacking integrity when we do this with paper. The second problem is that all Service Ontario wanted to know was that I live at this address. They didn't want to see my last 30 days of banking transactions. So from a privacy point of view, what we do today isn't that great. But users understand it, and it kind of works. So this is more like the concierge model that we created. We took it a step further, and we did this digitally now. So it's the same kind of thing. The users can choose what source credential they use to get the service that they want. So it works kind of with the way they're used to. So what's good about it is this is way easier for consumers. The concierge model bears that out. The challenge with this kind of model is when you have a central broker in the middle, as we heard the presentation before, you can get into some playing around in the middle. And so if you have, the criticism in the academic community is you've got an honest but curious broker. NSA peaks at every transaction, gathers up all the metadata. You really don't want that kind of model. You also have a single point of failure, which isn't great. So the other thing is some of the government models that are happening in other parts of the world, you kind of get a honeypot of data happening in the middle, so that's not great either. But it has been, the concierge model demonstrates this really did move the ball along. And again, the thing we're doing in Canada is authentication only, so there is no PII in our system that we have today. But now we need to get to the next step, which is solving this KYC challenge. And so that brings us to what we're doing now. So one of the things we invented is this thing we call the triple blind protocol. When I use my bank account to get to government, the bank doesn't get to see where I went. The government in its place knows I came from a tier 1 bank. But they don't know I came from TD Bank or what my bank account details are. And our company, SecureKey, we don't know who you are. So in a triple blind privacy model, what that says is none of the transaction participants got a complete picture of the user journey. So that has been really powerful for authentication. What we're doing with blockchain now is actually doing the same thing with identity information. So in those examples I showed you, when I shared my information with TD Bank over to Rogers, Rogers did not see it came from RBC or Scotia. They just know it came from a tier 1 bank. All right? The bank in its place didn't get to see where the data went. So that's kind of powerful. In our company, we can't see the data. And this is a discussion we need to have as a country, is how do we want this to work? Absent a solution like this, the default answer is going to be Facebook. And in the Facebook model, what's going to happen is I'm going to have a digital credential as we do an e-consult with my doctor on the internet. When I'm done with her, then I'm going to go over to the pharmacy and get my prescription. When I'm done with that, I'm going to go to my insurer to submit a claim. In the Facebook model, for the next 6 weeks, I'm going to see an advertisement for that special cream I just got on my computer. That's what's going to happen. So we need a privacy model underlying all of this. So in this model, this triple blind, well, exactly, that's actually more to the point. Or if I just booked a secret vacation for my wife, it's not a secret because now it's going to be my screen for the next 6 weeks, right? So what this does then is, because we're using blockchain, blockchain does 3 distinct things for us. The first thing it's doing is giving us data integrity. The information that was issued from TD Bank is digitally signed by TD Bank. So when Rogers looks at it, they know it hasn't been altered in transit. So we get integrity. The second thing it gives us is resiliency. Because now all of these players are running their own copy of the ledger. In order to do a denial of service attack, you have to take down all the banks, all the telcos, and all the provinces, and the government of Canada. That's what you need to do to take down the identity network. Pretty high bar. And the third thing that we're getting from blockchain, and this is the reason we're using it, is blinding. So the blinding is really the thing I just talked about, is that when I share my data, the source doesn't get to see the destination doesn't see the source, and we can't see your data at rest or in motion. So that's triple blind identity. So what this is really doing, so this solves all the problems that we had in the second model. There's no honeypot of data now. We have triple blind privacy. There's no single point of failure, and there's no tracking. So these are all great things. The downside is the world has to change. And so I'm going to talk about that change in a second. And again, this is just building on what users understand already. And it gives power to users because it allows them to use the stuff they have already, these trusted relationships, to get the stuff that they want. It allows each of us to just go about our day, easily proving who we are in a way that's easy for us, but hard for crooks. And so it inverts the current model. Today it's easy for crooks and hard for users. So it's a complete inversion of the model. So this is really more than just KYC. It's trying to enable consumers to do all sorts of things, like opening a new bank account, be able to sign a power of attorney so that if I'm incapacitated, my wife can step into my shoes and there's an e-contract there that she can use immediately to make medical decisions for me. I can store and share information in my network, do address change in a trustworthy way, and prove that I'm trusted in the social and sharing economy like Airbnb. So I'm going to let you read these, and I'm just going to tell you a story while you're reading the summary, which is the points they asked me to address for the presentation. 100 years ago, every company had a VP electricity whose job was to run the electrical generator for the company, right? And so in that model, what happened was that the small players couldn't have a generator because they weren't big enough to run a generator. Running a generator was a very specialized skill. And so along came somebody like me from the electrical utility to your business saying, hey, we've got this new electrical grid, I want you to join. And what happened was we got two versions of yes and 2 versions of no. The first version of yes is, I don't have this generator, I was too small, I'm in, I want that. I'm in for the grid because I get cheap, abundant electricity, and I'm in. So that's the first version of yes. The second version of yes is some people had their generator and they hated it. It was complete hell running this thing, specialized skill, wouldn't always run, always requiring reinvestment. So some people didn't like the generator, they moved quickly too. Then we got the first version of no. The first version of no was, I love your story, I'm in, but I just bought this generator. Come see me in 15 years. So we're seeing that version of no in this digital identity ecosystem now. And then the fourth one, the second version of no, is I like my generator. It means I don't have to depend on you guys. I like it. It keeps me independent. I don't have to depend on your grid. And that's kind of where we are with digital identity today. What's interesting is the original use case for electricity was the light bulb. That was the only reason we had it. But once we had cheap, abundant, and reliable electricity, the number of use cases for electricity expounded. And so we're going to see that's going to happen with digital identity too. The challenge we have today is every business on the planet has their own business digital ID generator. And so in order for them to join this grid, they've got to make this transition from issuing user IDs and passwords to accepting user IDs and passwords. And that's the journey that's in front of us. In the electrical grid, in the end, everybody joined the grid. That's going to happen with digital identity too. But it's not going to happen overnight. This is going to be 5, 10, 15 years before everybody's on the grid. But that's what's coming. Cheap, reliable, and abundant, trustworthy digital identity, so you don't have to mint your own. And that's what our business is all about. Thank you.